All right, welcome. Thank you for coming. Today's webinar is brought to you by MCSC Women's Business Center. We're a nonprofit business center serving entrepreneurs in SLO, Kern, and Monterey counties. We help startups and existing small businesses with mentoring, entrepreneurial training courses in English and Spanish, and classes like this. Our consultants can help you with budgeting, marketing, social media, website development, HR, and tax planning. Our contact information is on the screen. I would like to thank Gabe Quiros for presenting today. Gabe is an MCSC consultant who helps new and existing businesses. He's helped restaurateurs with licensing, marketing, budgeting, and pivoting during the pandemic. He's also become a specialist regarding the COVID-related resources. He's helped so many clients get PPP loans and forgiveness, economic injury disaster loans, otherwise known as EIDL, and the California Relief Grant. He's here today to help explain the Restaurant Revitalization Fund. If you would like more assistance after today's session, just let us know. Gabe's happy to help you at no charge. So before we get started, I just wanted to cover a few basic housekeeping items. Please limit your distractions so you can be fully present. Your video is off and your microphone is muted. We will be taking questions through the chat box. I encourage you to write your questions as you think of them, and we'll answer them at points throughout the presentation. This webinar is being recorded and a link will be provided to you once the recording is processed. So just to find out how you heard about us, let me launch this quick 30-second poll. Please let me know how you heard about this. All right, so without further ado, I hand you over to Gabe. Thank you, Gabe.
Thank you, Barbara. Let me, well, welcome everyone to this presentation of the Restaurant Revitalization Fund presented by the offered by the SBA, called the RFF. Sorry. Let me just clear my screen here. And this workshop or this chat is going to be basically, we're going to see the overview of the program, the application process, the eligibility and how to use the funds and which funds are, what are the eligibility to use the funds. And then we'll review some samples of the application. So basically the program is really to support the industry of restaurants or the industry of the food and services that was devastated by the pandemic. So the baseline is going to be anything that was pre-pandemic. So the 2019 tax returns are going to be critical. If those that open business in 2019 or late 2019 or in 2020 or even in 2021, we'll have some, there's some opportunity also for you in the process of the calculation for the grant. And we will cover that when it's time. But basically, the purpose of the program is to revitalize the devastated businesses of the food industry. And the purpose is just to compare prior to the pandemic. So everything is pre-pandemic 2019. So the government is giving 28 billion, just for curiosity of numbers. I just count the zeros that are in that figure, 28 billion to the restaurant industry. And it can be used with businesses that have applied for the PPP, have received funding from the EIDL, or they have an employee retention tax credit. This program is administered by the Small Business Administration. It is not through the banks as it is the PPP. So this is directly through the Small Business Administration. And the grant could be up to $5 million per restaurant if the restaurant really justifies that amount of grant, or up to $10 million for a group of restaurant group that does not have more than 20 locations. So it is a pretty substantial program. The funds must be used for eligible expenses until March 11, 2023. So we have basically almost 2 years to use those funds. let me see if I'm missing. So is the funds, once we receive the funds, we have until March 2023 to use them we'll go over the expenses that can be used for the eligible use of the funds. The application process is very simple. As of April 30th, last Friday to today, you could have gone to the portal, and you can still go to the portal. It was just that it was open before, so people can register in advance. But right now, today is the day that the fund, the grant is open. And you can go to the portal of restaurants.sba.gov. That's the portal where you can register to have access to the application. Now, within the first 21 days from today to 21 days, the key categories that are going to give them priority are going to be the businesses or restaurants that were owned with the majority of the ownership are women, are veterans, or are segments of the community that are socially or economically disadvantaged. In many cases, could be another elements of race or elements of disabilities or class protections that may be implicated in that gives some economically disadvantaged. But after those 21 days, it doesn't mean that the application process closes. The application process is open until the funds are used. But after those 21 days, then everybody becomes into a flat plateau, and everybody is part of the entire pool. But for the first 21 days, they're going to give priority to women-owned businesses, veteran-owned businesses, or socially and economically disadvantaged individuals that have 51% ownership of the restaurants. So once you go to the SBA, the restaurant.sba.gov, you can register. You have to create your login, your username, and your password. I think your password needs to be 12 digits, 12 characters. And the only you need to do is just have your cell phone ready, because they're going to try to authenticize the authenticity of the applicant through text. So once you start the application, you give you the credentials. Immediately, they're going to ask you for your cell phone numbers, because they're going to send you a text that you have to enter so you can be authenticated into the application process. There are 3 ways in which you can apply. The one is definitely through the portal, restaurant.sba.gov. It's online, it's very simple. The other one is if you have, there's some vendors that are approved by the SBA to assist you through the application process, and you can apply through them. And you probably need to contact your contact of those vendors. And the third one is mail by phone. You can just mail it. You can just mail your application. Of course, it's going to take time. So I would recommend, obviously, the online. If you have any questions about the application process, you can use this number, the 844-279-8898, 844-279-8898, in case you have any questions. They are very helpful in many things. Of the point of sale vendors, the POS vendors that can help you with the application are, if you have any of these 2 vendors, Toast or Square, you can apply through them. Or they can assist you in the application process. If you don't have Toast or Square, you can just go directly to the website, or you can just go directly to the website. There are other vendors that are supporting this program, but they're not helping in the application. They're just providing information, some documentation that you will need in the process of the application. And that's basically the Aloha. If you have that POS system, they can provide you with some information that we're going to see later in this presentation, what kind of information is what you need, or Clover. You're going to need your reports, your record of sales, so they will help you provide. They know what information you needed, so you can ask them and they will provide it to you. But these two, they do not assist you in the application process. Okay, the eligibility is very accessible. The purpose of this grant is basically to support businesses where the public or patrons assemble for the primary purpose of being served food. So the purpose is that they gather in a place to be served food or drinks. And that's why it's called by definition, a restaurant. It's a place where you can go and sit to have food. There are other nature of restaurants or semi or restaurants that have mixed servings, and it can be, as long as you justify the 33% are sales on site, that your sales are on site, then you are eligible. But it's open to breweries. If in the brewery 33% of the business is food and is consumed in the location in on site, they're eligible. Food stands. If you have a food stand, even though you take the food to other places, that's you're eligible. Food trucks, if you own food trucks, you're eligible. Caterers also, they are eligible. Coffee shops, again, if the consumption of the food are 33% are in this on site. If the 33% of consumption is on site of your sales gross receipts, you are eligible. The same thing with ice cream shops, same thing with bakeries. Sometimes bakeries, they offer coffee and people sit in the restaurant. As long as 33% of the on-site sales are there, they're eligible. Of course, sometimes inns, they give food to their guests, and tasting room. And another eligibility is that you have to be in business. If you close, you're not eligible. If you're close, you're not eligible. So let's go who's non-eligible. Probably that we also answer the question of eligibility. It's easier to go on the negative than the positive. If you don't have a social security number, if you don't have a TIN number, or if you don't have an EIN number, you're not eligible. Basically, if you don't have any of this, you may not be eligible to be in business at all. But you need to have your social security, your TIN number, your EIN. If you don't have it, you're not eligible. If you are a nonprofit organization, if you're a nonprofit organization that provides food, you're not eligible. If your business, which I don't think none of us see here in this call, if your business is traded in the stock market, you're not eligible. If you are pending or receive the grant, the SGOV, the Shuttered Venue Operators Grant, sometimes some venues they host concerts, and if they serve meals in the venue, if you apply for this grant, for the Shuttered Venue Operators Grant, you're not eligible. And if you have more than 20 locations, you are not eligible. You are probably too big for it. 20 plus restaurants, you're not eligible. If you are permanently closed, or you file for Chapter 11, Chapter 7, Chapter 13, or Chapter 12, if you are closed, or if you have filed for any of this bankruptcy proceedings, you're not eligible. You are also not eligible if you are a federal or local or state government entity that provides food. So basically, the local governments, the states, and federal government are not eligible for this grant. This is just for businesses. Basically, it's very clear. The use of funds. We said that the use of funds, you can use them from March 11 to the end of until March 2023. So you have basically almost 2 years to use the funds. And what can you use them for? The main one is for any business expense, any business operational expense. And this is, your entire operation. Could be your payroll costs, could be for your utilities, could be for maintenance, could be for supplies, raw materials, insurance, marketing, legal fees, licenses, insurance, point of sales fees that you have to pay your vendors, legal, anything that is in your operations, it is an eligible business expense, anything that is a business expense. You can also use for construction expense, but as long as it is not for expansion. If you are trying to expand, add a new room, or add expansion, add more chairs, or add more, if it is for the purpose of expansion, you're not eligible. But if it is for, let's say you need to buy more heaters, well, we'll go into summer, you don't mean not heaters, but you need to, I don't know, change the carpet of your parking lot because you used it for during COVID, and you need to continue open and outdoor seating. That's okay. Let's say you have a truck, you're a food truck vendor, and your truck is needs to repair. That is eligible. But if you want to buy a new truck, the new truck is not eligible. We can go into very creative accounting. Sometimes it can be used for depreciation as long as it is not an accelerated depreciation. If it is an accelerated depreciation process in your bookings, in your bookkeeping, that you're not eligible, but you can use it for depreciation. Another thing that you can use is for business debt. If you have either a mortgage or some service debt that you have, you're buying equipment or simply a credit card, you can use it for principal and interest, but only from the period you receive the funds until March 22nd. These funds cannot be retroactively to pay principal and interest. They cannot be retroactively to pay any balance or any debt that you have incurred in the past. This is just for current. So for example, you have a mortgage. The mortgage, you can start from the moment you receive your loan up until the end of the March 11, 2023, you can apply funds to pay principal and interest of your mortgage. If you have a loan on a refrigerator or a loan on furniture that you're buying, you can, from the moment you receive the funds to the end of 2023, you can use it for to pay principal and interest. If you have credit card debt, the same thing. As long as it's used between, as long as it's been incurred after February 2020, and as long as you can make those payments not retroactively, but currently, as of the moment you receive your funds till the end of March 11, 23, you can make the payments of principal and interest to your credit card through your credit card. That's something that is eligible. The application process, there are three formulas that are implied in the application process. They call it a fourth because there's a section of a fourth, but the fourth is just the results. But basically, the application has three calculations, and they're very simple. The main one, and the first one is for businesses that they have a complete year of business in 2019. They were completely operating in 2019. And as again, remember, the purpose of this grant is to support to make the offset of the pre-pandemic losses. I mean, the post-pandemic losses. So if you have 2019, you were open from January to December, and you have your tax return, the first calculation is applicable only to you, and it's very simple. Simply, you use your gross receipts from 2019, and you subtract your gross receipts from 2020. Simply, just your gross receipts from 2019 minus your gross receipts from 2020. That's the amount of the grant that you're eligible, but you have to deduct, you have to subtract any PPP that you received. So that will give you the net value of the grant. If you haven't received any PPP, for whatever reason you didn't apply for the payroll protection program on the first run or in the second run, then you can get the difference. So for example, let's say in 2019, you sold $600,000. And in 2020, with the pandemic, if you were lucky, you made $400,000. The full amount of the grant would be $200,000. If you receive a paycheck protection program, then you deduct that payroll protection program that you received, the first one and the second run. And that will be then your net or your balance that you can receive still to support the your economic relief from the SBA. So it can be $80,000. So all depends if you receive the PPP or if you do not receive the PPP. Anyone that in the moment is waiting for a second run PPP that has not been approved, or that you apply for it, if you want to apply for this one, you have to withdraw your application. And many times it's not you that you have to withdraw the application. the Small Business Administration, because it's managing both of them. They will match your social security number or your TIN number or your EIN number, and they will withdraw your PPP application, and they will proceed with this application. So this is very simple. Is the first calculation that if you had an entire full year of operations and you were open way before 2019, you've been opening for 10 years or 5 years or 3 years before 2019, you just use your tax return, whatever you sold in 2019 minus what you sold in 2020, the difference, that's the base for the grant. To that, you have to deduct your PPP. Very simple calculation, not complicated. The second calculation are for businesses that were not open the entire year of 2019. Maybe they opened in September, or maybe they opened in August, or maybe they opened in December. Any business that was not open in 2019 or that opened in 2019, the purpose of this calculation is basically to try to find a projected potential or projected gross sales for 2019. So it's going to be very simple. It's going to be, you select, if you were open if by any chance you were open in September, you're going to use September, October, November, December, and you're going to get a monthly average. If you were open for those 4 months, you divide your total sales for those 4 months, you divide it by 4. If you were open in October, November, December, the number of 3 months, that's 3 months. You use the number for your average of those 3 months, which will be your total sales for those 3 months divided by 3. If you were open in 2 months, those 2 months divided by 2. If you were open 1 month, that's 1 month. So you have to get the average monthly gross sales of the period that we're talking about. Then once you have your average monthly sales, you're going to multiply it by 12. So once you have your average monthly sales, you're going to multiply by 12. And that is going to give you a projected estimated gross revenue for 2019. Once you have that number of the gross estimated 2019 sales, even though you were not open to 2019, they want you to project what would have been if you were open based on your monthly average, your monthly gross receipts. Once you have the estimated 2019, you go back to the regular formula, then you subtract 2020, and then from 2020 gross receipts, you subtract your PPP if you receive a PPP, and that will be the grant. So the second calculation is basically you have to start, if you were not open or you were open, you started up your business in the middle of 2019, you have to project what would have been the total sales, your total sales for 2019 based on the average monthly sales times 12 months. That's very simple. And in the application, you will see the instructions. Shouldn't be a problem. The third one is for businesses that were open any time between February 2020 to March 2020. The third one is a little different because if you were open between in 2020, you opened in 2020. And for that one is you're going to use it, it's going to be a different approach. You're going to use all your expenses, all your eligible expenses, everything that you had to buy to open your business. You have to pay for rent, you have to pay for electricity, you have to pay all the opening expenses, and probably the first 3 months you didn't have enough sales. But you have to add all your eligible expenses, which we saw briefly, which ones they were, your operational expenses, and then you're going to subtract your sales. You're going to subtract the sales that you did from February to March 11, 2011. So basically, it's going to be very simple. Let's say your eligible expenses that you had from February 15 to March 11 are up to $200,000. That's how much you put as upfront expense. You have to pay for payroll, you have to pay for employees, you have to pay for taxes. I mean, no tax, but you have to pay for utilities, you have to pay for rent, you have to get licenses, all your upfront expenses. Now you're going to subtract your sales. Obviously, your sales are not going to be over your expense. I mean, if they are, good for you, good for you. But with this pandemic and economic conditions, probably we're not enough. So we're not strong. So probably your sales are going to be very, very, very small. So that's the difference of this calculation. Your expenses are going to be higher and your sales are going to be lower. So you subtract those. And if your sales, your expenses were $200,000 minus the $80,000 of your sales, then you have $120,000. That's your eligible grant. That's eligible grant that you have to use funds until 2023 to use it for, again, to revitalize your business, to revitalize your restaurant. And if you receive any PPP, for whatever reason, maybe you apply for the PPP and they give you the first loan and they give you the second run. If you apply for the PPP, you subtract your PPP from that number, and then you get again a new number for your grant. So basically, these are the three calculations that you're going to find, and you have to select which one do you fit in. If you were open if you've been open for 10 years and you just have your 2019 numbers, you subtract them from your 2020, and that's the number minus your PPP. That's calculation number one. Calculation number two, you were open in 2019, but you were not open the entire year of 2019. Then for that calculation, you just get your monthly estimated gross sales. Once you have your monthly estimated gross sales, you multiply it by 12, so have a projection for the entire 2019. Once you get the number of 2019, you subtract your revenue of 2020, and the difference is what you can get for the grant, what you can apply for the grant minus the PPP loan. And the third one is if you were opening your business, you were opening during 2020. If you were opening during 2020, then the calculation is going to be based on your expenses minus your sales. And that the difference is going to be what you can apply for the grant. And again, if you receive the PPP, you just have to deduct the PPP. And the fourth number of I think in the application says calculation. The fourth is just basically the results of your applicable calculation. The application is going to ask you for some documentation, so you have to be prepared. You have to have any of the following documents that demonstrate gross receipts and applicable expenses. So you have to show documents of gross receipts. And what are the documents of gross receipts? Basically is going to be your tax return, your Form 1120 if you're a corporation, or your Form 1120S if you're a corporation S. If you are a sole proprietor, obviously they're going to ask you for your Schedule C. If you are a partnership, your 1065 or your K1, including your K1s. They're going to ask you for your bank statements. They may ask you for bank statements for February, April, and May for this year. Or maybe you can just show your bank statements that show your revenue for your documentation. If you have QuickBooks or you have another program for accounting, you can prepare financial statements or such, obviously income statements or profit and loss statements. Either that you work with QuickBooks or with whatever accounting program that you have, and also through your own. I mean, if your own firm, if you do your own profit and loss statements, you can submit those. You can contact your bookkeeper or your accountant. They can provide you one. Obviously, they're going to want the point of sales report, just because you're basing your loan on expenses and on revenue, so you're going to need to provide those. And if you are maybe a catering service or a food truck or whatever, you may have a 1099. And if your business receives 1099, just justify your income, your sales. That'll be the documents that you will need. We're going to take a look at the application right now. The application is very simple. The form is SBA Form 3172. If you want to fill it out, or you can work on it before you go online, you can download it from the SBA website. It is very simple. The application, paper application, is a series of questions in which they tell you that if you're eligible, if you are, they ask you if you're a government entity or if you're a publicly traded company, or if you're a name, address, tax ID. They ask you basic information. Then you go into the calculations, and the calculations are very simple because it's very simple application. It's very clear. Just make sure which one do you qualify in, the first one, second, and third one. And then there's a certification or certification that you are either a veteran, a minority, or some of the disadvantaged classes. To go online, as I said today, the portal opened today. So you can go to restaurants.sba.gov, and you just go into your application portal, which is, here's a sample of the application portal. You can see your application status, and you can go just basically answer the questions. They're very simple. Questions that are yes, no answers. Then you go into the certification. Then they will ask you for your business information, your EIN or your TIN number, or your social security number, your business, your address, your phone number. Basic information is about your bank, about your business. And then you go into the calculation process. The calculation process is, again, very simple. With that, basically, I think that's the main core of the process. I can answer any questions if you have any within your chat.
I am not seeing any questions yet, Gabe.
Okay.
If anybody has questions, we can unmute you if you prefer to just ask them, as opposed to typing them. It's up to you. All right, well, it looks like everybody is taken care of.
Yes, well, it's a great opportunity for the for businesses. The SBA is really putting a great opportunity to support the restaurants, and they might be more than $40,000, $100,000 or $25,000, depending on your calculations. How much you can capitalize on this opportunity. It's a great opportunity for businesses. The portal is open today. Gather your information, and we encourage you to explore and get the benefits that the federal government is supporting, using to support businesses.
All right, well, thank you all for coming. If you want to continue your learning, and thank you, Gabe, so much for doing this. Gabe went to a webinar and saw this information, decided it was great to share with you guys. So thank you so much for doing that, Gabe. We do have some classes coming up. We have one on Google AdWords on the 5th. That's right around the corner. Shopify, that one is actually in Spanish for those of you that are bilingual. Then on the 18th, we have Create Your Vision Board for Success, and they will be using Canva as well as paper. If you prefer Canva, you can use that. Cybersecurity for small business, and then we have one on Etsy. For those of you who want a little boost with your business, or if you have a business idea that you want to get launched, our summer entrepreneurial classes are coming up. One in English, one in Spanish, starting on the 1st in English and the 15th in Spanish. We encourage you to visit our website to register. Thank you all for coming. Have a great week. Bye.
Bye.